Bitcoin left. There's not even one Nakamoto of Bitcoin left on the exchanges. Now, what does that mean? Bitcoin is gone. What do I mean by that? I mean, let's say you wanted a million Bitcoin right now from the exchanges. You had all the money to do it. You could not buy 1 million Bitcoin right now. It is not an achievable feat if you were to buy it all through the exchanges. There is less than 1 million Bitcoin left. Remember last month I was telling you there was reportedly about 1 million left. And the big buyers were continuing to buy in big chunks. Well, the latest data we've seen is that there's about 970,000 on the high end, about 920,000 towards the lower end of the guesstimate. That's right. There is less than, in fact far less than, 1 million BTC left available on exchanges. How did that happen so fast? Well, because the buyers bought them and moved them off the exchange, took them out of trading, took them out of circulation. What are they doing with them? They're holding them. Why? Because they're providing ETFs and other products to people who want to buy those derivatives. Again, when you buy, for example, a Bitcoin ETF, you're not actually buying real Bitcoin, right? You're basically buying paper Bitcoin. Meaning it exists on paper, but you're not actually buying a real Bitcoin. Right? You're not buying a transaction that actually has, Satoshis in it. You're buying a piece of paper that says that if you cash out that amount from your ETF, you can claim that amount as Bitcoin. That's all it says. But really, mostly, they'll settle with you in dollars, because that is the purpose of an ETF. And people don't buy ETFs in order to hold the underlying. If they want to do that, they could just stack and rack by buying on Coinbase or Kraken. Even though we discussed the hack on Kraken yesterday, you can still buy there. Right? That was a quote-unquote white hat hack. So it's still considered a relatively safe exchange, but again, all exchanges can be hacked, and many have. So don't keep your funds there. That's another reason, by the way, that there aren't that many coins available, right? Because over the years, obviously, with the amount of hacks that have happened, it has certainly gotten the attention of people who aren't necessarily traders and, purchase it on an exchange and then just move it off to keep it safe, because they realize that keeping it on the exchange is not the safest option. Of course, you're going to have people who keep funds on exchanges for other reasons. Maybe they're staking something. Maybe they have some other kind of position where they're providing liquidity. They're providing shorts for liquidity, or they're providing whatever. People do that, right? So they use it for different reasons, and they're not using, wild leverage or something like that. They're just holding positions in order to get funders fee, like market maker fees, or they're holding positions, for whatever other reason, right? It might be that they do business and need to buy and sell a lot, or buy and send, and buy and use crypto a lot, right? A lot of people do that. I know not the whole world, but there are an increasing number of businesses that use crypto as a payment vehicle, and it works quite nicely. I can tell you that, having been one of the very first people, if not the first, who actually use, Bitcoin for that purpose before Pizza Day. Right? We all know, Bitcoin Pizza Day was the first transaction for pizza using Bitcoin. Yes, but it wasn't really the first transaction for something in the real world. There were people bartering small little things, content, other kinds of information for Bitcoin from the very, very first months. And I can assure you that that was happening because I was one of the people doing that, as were some other people. But the Bitcoin Pizza Day is really a remarkable day in the sense that it was the first time that like a sizable commercial enterprise accepted Bitcoin in exchange for, real world goods that it normally sold only in dollars. It wasn't just between two enthusiasts, sending each other Bitcoins in exchange for content or a little computer fan or, that they'd already purchased and that they were, sending off as a, as a barter exchange kind of thing. It was, in that sense, it was very important because Bitcoin Pizza Day launched kind of the real e-commerce, if you will, the real commerce, right? Mixing the Bitcoin world and the physical world over an exchange of goods or services that wasn't connected in any way to the computer world, really. Other than obviously the computers that they use in the company to manage their accounting and that kind of stuff, right? It's a pizza shop. It's a brick and mortar business, So, anyway, that was an important day, that's for sure, in Bitcoin history. And worth the mention. Now, before I gave you that little sidetrack tangential story, right? I was telling you that there are no Bitcoins anymore on these exchanges. So think about how rapidly we've gone from, will you please take my 10,000 Bitcoin for 2 pizzas, to, where the hell can I find 10,000 Bitcoin? Right? It's, yes, you can still buy them on exchanges. There's still 970,000 of them. But there's less than one Nakamoto's worth. What does that mean, a Nakamoto? It's a colloquialism in the Bitcoin world. That means you have about 1 million of them, because there's only 21 million and Satoshi Nakamoto mined about 1 million. It's estimated. So the million or so that he has are sometimes referred to as a Nakamoto. Right? I mean, he has 1 million Bitcoin. Right? Well, think about this. The ETFs in 5 months, the US ETFs in 5 months went from 0 to 1 million Bitcoin in 5 months, and they did most of it in like a 3-month period. And get this part, a few weeks ago, a couple weeks back actually, in a regular 5-day trading week, they bought 2 months worth of what is being supplied right now in 5 days. I'll repeat that. In like a couple weeks ago, right? The big ETFs, BlackRock, etc., right? The US-based Bitcoin ETFs purchased more Bitcoin than is produced by the miners now, at a rate of 450 Bitcoin per day, than they produce in 2 months. So 450 times 60 or 61, right? Think about that. They purchased more than that in 5 days. So as I've been telling you, where are they getting it from? They're getting it from old whales, old wallets, who are happy to sell it to them, because again, they're selling it over the counter, therefore they're charging a premium. They're not charging market rates. Banks are going to them begging for this Bitcoin. Please, we'll pay you anything, just sell it to us. And the whales are happy to sell it to them. Maybe they're paying, if the price is right now 65 on the market, maybe the whales are paying 70. I mean, they're getting paid 70 to sell their Bitcoins. Maybe they're charging 75. Who knows? The banks don't really care. It's OTC. It has no effect whatsoever on the actual market price. And that's why they're perfectly happy selling it at that price, whatever they're charging. Because one, they're getting a premium, right? Two, it doesn't affect the market price. Three, it's just Bitcoin changing hands between whales. And four, if it dips further, the whales get to buy more for cheaper. Whatever they sold to the banks, they can go and get some if it's still available. You know, they can buy some for cheaper if it dips more. And if it doesn't dip more, they can still buy back in at a and having made a profit. So as long as they buy below a certain price that's beneath what they got for their premium, they still made a nice profit, right? Or they're just going to buy at a market rate from the exchanges as long as it's available. Now, why aren't the banks buying it from market rates? From the exchanges, directly off the exchange. Do you know why? I mean, they are buying from the exchanges, but OTC. Why do you think they're not just buying it, like entering the market and buying it like a regular retail trader like you and me? Why aren't banks doing that? Why aren't ETFs doing that? Do you know why? Do you want me to tell you why? No, they're not doing that because they know if they went in and every day we saw 200 million added to the market, 400 million added to the market, 600 million added to the market, 800 million added to the market, a billion added to the market, $1.5 billion added to the market. And that was the drumbeat every day. And just went back and forth between numbers like that every day, up and down and up and down. But we're talking hundreds of millions to a billion or more a day. Do you realize what that would do to the price? Now, when I say to the price, I mean because that would do massive things to the VEPs, right? That would affect the volatility, entropy, probability, and statistics. Why? Because they'd be making massive amounts of buy orders and just holding them spot long, right? Right on the market. You don't think that would affect the market price? If they're buying about 20 times more than is made on any given day? You don't think that would affect the market? Are you serious? Like, think about it. I just told you that for a couple weeks ago, in 5 days, they bought 60 days worth of mining. And of course, the miners aren't selling them their coins. The miners are only selling the absolute minimum necessity, essential, what they need, necessity. The miners are only selling the absolute bare minimum that they need to sell in order to cover their bills. The rest they're keeping. Why would they keep it? Why do you think they would keep it? First of all, you think they're going to sell it when it's going at a low? Not unless they're selling it at a heck of a premium. So the only fresh minted virgin coins that are new being sold, that aren't for covering bills and that are actually being sold to, speculators like banks, financial institutions, and others, the only ones being sold like that are where the miner has a connection to that institution and they know them. By the way, a lot of banks own mines, so they're just getting their own. Like the big banks, Prudential, Fidelity, kind of, large banks. If you think that these miners are just start working their butts off to mine coin, and then the moment they get it, sell it off, you don't understand how this works. Miners get the coins that they get, and they save them, right? There's already 19.7 million in circulation. And if you've mined a bunch already by now, there's no need to sell all your coins. Oh no, price went down 15% from the high. Oh, it went down 20% from the all-time high. Who cares? The miners who have significant mining farms are not worried if price dips 80%. They're not worried if price dips 90%. How do we know that? We've seen it time and time and time again. They hold. Sure, the little ones can go away, because for the little ones, they're going to take a severe hit, and they can't necessarily afford to take that kind of a severe hit for that long, for like a year or more. But they come back eventually. And they sure do. Look at the hash graph. There's more network power now boosting Bitcoin than there ever was. Why do you think that is? There's less Bitcoin available than ever, right? And it's going to keep being that until it's zero. In terms of there's less available to mine. The rewards are smaller, and yet more people are mining it than ever. And more people are securing the node than ever. And more people are running transactions than ever. Why do you think that is? It's really kind of obvious here. We're talking mathematics, right? Basic mathematics. The value of the coin goes up. The perception of the value of the coin goes up over time. And that perception is affected by the number of people using it. It's the power law kind of thing. And the network effect. So if your price is basically following the power law, and it doesn't have to keep doing that, it's already done it so long, it's statistically highly improbable that it would have done that, but it did. Never mind the VEPs for a second. If to the average person who doesn't know the VEPs, they see that the price basically goes up, and has dips, sure, but then recovers very nicely and continues to go up. Show them the price scale on a log chart, people instantly get it. This thing follows a very, nice roadmap to the upside over time. You don't have to be a genius to understand that. Now, of course, like I said, that doesn't mean it's going to continue that way by necessity or by design. But if it does continue that way, well, let's just put it this way. The asset was designed in a particular way that enables that to happen. Now, it's the VEPs that will actually determine where the actual price will actually go. Right? It's not really the network effect or the power law, because you have network effect and you have power laws available for everything. Not everything has such strong results when it comes to the power law, and not everything has such strong results when it comes to the network effect. But to suggest that only BTC can have a strong network effect is ridiculous, right? And to suggest that only decentralized asset can have a strong network effect is also ridiculous, because we know that in fact centralized assets of various kinds have extremely strong network effects. Are they as beloved or well spoken of as Bitcoin? No, not necessarily, but some are, right? Think about car makers that are, that have a long legacy, already more than 100 years in some cases, right? If not at least many decades, that have millions and millions, probably hundreds of millions of fans around the world. Far more than the number of people who actually even hold, like Bitcoin, right? So there's 250 million people on the planet who hold Bitcoin. Now that is a remarkable scaling effect over 15 years, 250 million people, that's a lot. But how long did it take for example, Facebook to get to 1 billion people? About that same time, right? Even less. That's 1 billion people. 5 times as big. And you can say, well, there's no cost involved. Well, there is, though, because there's still time involved, and time is money. Right? So there is a cost involved. It may not be a highly perceived cost, but it is still cost. And Some people do obviously pay for it, like advertising money and everything else. But even if you just include the free accounts, there's still time involved, and we're still talking about 1 billion people. Right? How many people use YouTube? It's like 3 billion a month. I mean, think about that. You know, if it's even 1 billion a month, that's a lot of people. Right? So at 1 billion people a month using it, how long did it take them to get there? Even if you tell me 20 years, 20 years is, again, it's 1 billion people actively using it. There's not 250 million people a month actively using Bitcoin. There's 250 million people with some Bitcoin in some wallet somewhere. Right? I guess I say some Bitcoin because the vast majority of those 250 million obviously do not own a Bitcoin. They own some amount, some portion of one Bitcoin. So I don't have to say Bitcoins because in their case, they each own less than one. For the vast majority, we're talking about the average. But, as I've spoken to recently, when you're talking about the numbers, if somebody has more than one, you say Bitcoins, and if somebody has one or less, you say Bitcoin. Anyway, I just wanted to bring that to your attention because people are very clearly losing opportunity by not getting as much of a stack of Satoshis as they can right now, while all the biggest whales in the world are literally piling it on. You know, 10 years ago, when the price was less than $1,000 for a coin, if I had told you that all the biggest banks in the world were buying Bitcoin, would you have bought any? Not looking back, knowing the price is $70,000. If I just told you 10 years ago all the biggest banks in the world are buying this stuff, would you have bought any? If I told you they're buying it before anybody else is really aware of it, there's only a small portion of the people on Earth who are aware of what this thing is going to do in the future, like be an incredibly important currency, would you have bought any? Would you have bought any if I told you that 5 years ago? Would you have bought any if I told you that 3 years ago? If not, why not? Right? Like, I don't care if you buy it or not, in the sense of you do you. I really don't care. I'm not shilling any links. I'm not advertising for anyone. I'm just saying, people who are not awake to what is going on, people who are not aware to what is going on, that we're literally living through an historical financial change in the way money works in the world and the way values are transferred in the world. We're seeing something now that is at best seen every few centuries. We're seeing something now that you will probably never see again in your lifetime, that your kids will probably never see in their lifetime, that your grandkids will probably never see again, that your great-grandkids and your great-great-grandkids and your great-great-great-grandkids will probably never see again in their lifetime. And that is the shifting of a system that goes from a fiat-based, debt-based system with unlimited supply to a system of limited supply that's uncensorable, it's on a public blockchain, and all these other things, these wonderful things about it. It's secure, it's portable, it's immutable, etc. Right? We're seeing all these things happening before our eyes, and we're seeing the very wealthiest people in the world come and take what is supposed to be, quote unquote, the people's coin, which obviously it isn't. Right? And they've taken that entire notion of, well, this is for regular people. They've taken that entire notion, thrown it out the door, into the garbage, And they're collecting as much of this stuff as possible because they want to own it. Why do they want to own it? Well, they want to own it so they can sell you products and services that are based on it, and so that they can loan some of it to you at a interest rate, because that's what banks and other institutions do. So they want to loan you some Bitcoin. In exchange, you got to pay them back Bitcoin at a higher interest rate than the actual inflation rate of Bitcoin, because Bitcoin's inflation rate keeps getting cut in half every 4 years, right? And right now, Bitcoin's inflation rate is lower than 1%, which means it's lower than the stated inflation rate of gold and diamonds, even though we know that they're both probably higher. And you can argue to me, I know all about, diamonds aren't the same, collective that they were for most of the 20th century and into the early 21st century because of all the blood diamond deregulation and everything else, the regulations. I'm aware of all that. I'm aware that the Russian syndicate is like a tiny bit bigger now than, what's left of the De Beers syndicate groups and all that. I'm aware of that. But still, diamonds are a controlled market, and diamonds do not just inflate at 1% a year. Right? They find more than that per year. But even if they only found 1% a year, right, that's still more than Bitcoin. Bitcoin's already less than 1% a year, and it's only going to continue to have its inflation cut further every 4 years until there's no more left to mine, at which point it will be a 0% inflation rate. And in fact, it will be a deflationary rate, and it already is, really, because of the amount of Bitcoin that are lost, inaccessible. They still exist, but they're inaccessible. So in a sense, that's a deflationary rate, because you can't replace those, right, with just, let's just print new Bitcoin. No, they're gone, they're gone. If people lose access to them, and like permanently lose access to them, they're gone. Yes, there are ways to hack back into accounts if you can figure out other, ways to find the password or whatever, but basically, if you actually lose your passwords, that's it, they're gone. Inaccessible. And what that does is it creates more value for the coins that remain in existence. So actually, the 5 or 6% Bitcoin that are lost, it's more than that, but the 5 or 6 million, sorry, it's closer to like 20 or 25% of the Bitcoin that are lost. Let's just say it's 4 million even, whatever, that are lost forever. They've created significant additional value for the existing Bitcoin that are in supply, that are accessible. Because like 1 in every 5 coins is not accessible. That makes the other 4 out of 5 that much more valuable. So, just some things to think about when you're thinking about Bitcoin. Anyway, folks, that's it for now. Happy days, happy Bitcoining. Cheers.